we are speaking about the easing policy, but now we are reversing it and we are more on the hiking side. We are like a period of exuberance on the stock market, but nevertheless, it's very important to closely have a look what they are doing. And the possibility of crack for the yen to come back. Our message, risk management is the priority. It should be your priority when it's our priority.
Welcome back to Merrill Talks. Today we're back discussing the macro side of things and the divergence of central banks. And let's get started. So, Mark, welcome.
Hi, welcome Mike, welcome to the audience.
Today, Mark, we're talking about the divergence and what different central banks are doing. And I'd love if you could give me a bit of a sort of introduction into what's going on.
Yes, it's very interesting what's going on because the rest of the world is hiking when the Fed stay in pause. And I think for the audience here, we will maybe show on the screen how's the things going. And because since the beginning of this year, several central banks have been quite active, from Norway to Japan. And it's an interesting fact about Japan because we did several videos the past few years. Because the Central Bank of Japan has been hiking, now reaching 1%. This is like quite a unique for them because they're moving out from easing policy now on the hiking cycle, but the yen is still going down and down. So this is what we could observe. But again, we will put again on the screen because some central banks have a certain mandate and some not. And as we know, the ECB, Mike, has the mandate related to inflations. More stability of the price when the Fed or the Federal Reserve has the mandate of growth and inflations. It was a surprise for a lot of people to see that Christine Lagarde hike 25 basis points. Why? Because we know the problem in Europe, we have a problem on the structural growth on certain area. Not in the south, as we know, and if you're following us, we are always quite positive on the south zone, Greece, Portugal, Spain, Italy. But we are quite concerned about, I will say France, obviously, but also Germany, because we don't see any plan B coming. But Christine Lagarde, she's still like going into more, we need to keep the guidance at 2%, and she hiked 25 basis points. Which is quite a surprise here, but she's following, I will say, a path initiated, I will say, in the European zone by Norway, and now with Japan also hiking. So we have this cycle. I think it's important also for our audience to see at which level we have in the cycle, because if you remember, if you have been following us, we are speaking about the easing policy, but now we are reversing it and we are more on the hiking side.
And in fact, Mark, you discuss briefly the ECB and the Eurozone. And if you can tell us a bit why you think the decision was made there, what was behind it, what were they thinking?
For the ECB, they want to be orthodox. Having like a target with forward guidance, the typical orthodox approach with the 2%, and they want to keep these things. And they've been scared about what's going on with the Strait of Hormuz, and the inflation's been quite sticky. But it's, you have to understand the problem of the ECB. They're very scared about a supply shock. They want to keep control of it, which is different than other central bank. But I will say, conclusion here, Christine Lagarde, she's very orthodox in the approach, and I think also I will say the Germans behind, because there is also all the European countries, but the German have been also quite following an orthodox approach. Which could be a problem because, like I say, growth is an issue in Europe, and could be a structural issue. So wait and see how's the things going. the question is, inflation is temporary or sticky? That's always the same questions. And the problem of the Strait of Hormuz is still around. So some central banks are nervous and they want to be preventive.
So, Mark,
Mm-hmm.
pivoting a bit to Japan.
Correct.
And last we discussed, the Bank of Japan was this unwinding of the carry trade, if you remember discussing
Correct.
and guiding our
Correct.
audience through that. I mean, we're seeing rates at around 1% now, Mark.
Yes.
What are you thinking about this?
I'm thinking it's an interesting point because the carry trade has been really on for nearly, I would say, 3 decades. And the funding currency was the yen. Now it's another story because clearly here the yen with 1%, it's not anymore could be the carry trade, because now even for domestic investors, I mean talking about Japanese investors, they think it's more and more attractive here to put money on the Japanese bonds. And it's creating also an issue who will buy also the US treasuries, knowing the Japanese investors are clearly here. So we are to closely monitor this because we know sometimes shock come, and we see already quite a lot of volatility on the market. And if something happens, like I say, it's counterintuitive. The Bank of Central of Japan have been hiking, moving out slowly since 2024 from the easing policy. And if you remember, they have been the pioneer on the easing policy, implementing this, I will say, in the 90s. So I think it's an interesting thing. I think, again, Japan remain quite on the uptrend, but wait and see on that side.
Thanks for that, Mark. And I mean, touching another major nation, the United States themselves. Let's talk a bit about the Federal Reserve. I mean, we've got a new chairman in place, and we've started off with what seemingly looks like to be a hold.
Yes.
What do you think? Is this a new trajectory that we're going to be seeing here?
Yes, I think clearly the Fed is in a new positions. As we know, Jerome Powell is not anymore in charge, is not anymore the chairman. Now we have Walsh who's in charge. I think for US, what is interesting, we know that we discussed several times about Scott Bessent, who's behind I will say the economic architectures, has some target, which is pushing the GDP at 3%, but also not having a very strong dollar. And in this way, it was a surprise for everyone because everyone was more like the debasement story, and seeing the dollar going down and down, like 11 up to 11%, and suddenly with this war coming in Iran, the dollar was going on the other side, flight to quality here, which is a bit the counterplan of Scott Bessent's objective to make him weak. So clearly here, I think the Fed and the new chairman, I mean, he's brand new in this role. It's not like Jerome Powell who has the things. He's probably enthusiastic, and we discuss about also how independent the Fed could be, knowing that this person's now replacing Jerome Powell and be more in line with Trump administrations, putting on hold. I know that Trump is always the person who's want to push the rate down because, as we know, it's coming from the real estate side. And the real estate, as we know, it's very sensitive to interest rate, and definitely real estate is always better when interest rates are going down. But I think it's clearly a wait and see. I think the point is the dollar trajectory. Two important elements for the audience and for you, Mike, it's the trajectory of the euro dollar that we need to monitor very closely, and the trajectory of the yen dollar or yen euro, because so far there is no so much crack. I'm talking about the yen, but we have been very surprised how resilient was the dollar when a lot of people have been saying, the dollar is going down, which is natural because the re-onshoring or the reindustrializations of US, you want to push export and you want to punish import. So far, I think the Trump administration is doing quite okay on these directions. A lot of people have been quite critical, but the re-onshoring is in place and it's paying. Now, obviously, we have elections coming in November, so we have an agenda, and summer is always, from a seasonal aspect, quite a volatile one. And we see already the market is quite nervous on that side. So I think we will monitor closely, like I said, the dollar trajectory, but also how's the Fed. Now, at the moment, the Fed is on pause. The big question here, is it a hawkish pause or a dovish pause? Normally we say the government wants more like be dovish, but the point is, it's quite interesting now. The Fed is not going in the same directions than the other central bank. So there is clearly a divergence, and wait and see, because the question is, we're talking about the carry trade for the Bank of Japan. The interest rate differentials can go not in the direction of the dollar now, but could be on the directions we notice already that the Central Bank of Norway has been hiking, so offering better rate with the Norwegian kroner than the euro. So clearly, I think here it's very important to see, and it's important because the macro is still in the back of this, because I know everyone is very focused about AI and transforming what's going on the tech, the rotation from semiconductor to the software and vice versa. I think we are like a period of exuberance on the stock market. And we put a little bit in the back the trajectory of the central bank, but they're still in place in the back. So maybe they are not visible at the moment, but nevertheless, it's very important to closely have a look what they are doing.
Understood, Mark. And you briefly mentioned the point of the possible influence that Trump had on the central bank, especially when we saw Mr. Powell having to battle his battles at the time. Do you still think that those that question the independence of the central bank, as opposed to the power that governments and markets have over the central bank, are correct to be questioning this independence point?
Clearly, I will say yes, it's a question, but I think the Trump administration's objective, it's liberations of the things. Be ultra-liberal, and that's why we discuss about how the vision of the Democrat and the visions of the Republican, it's quite different on that side. And also on a monetary policy, I think it's quite interesting because we can imagine that the Republicans want more, no control to it, but we can think the opposite, knowing that at the moment they are pushing, replacing the Fed. But I think the most important thing, it's not the influence, if it's Democrat or Republican, it's like the way they continue the Scott Bessent approach, which is liberalizations of the economy, including the central bank. Why I'm saying this, because normally a central bank keep with forward guidance, and US could say it's not anymore in place the forward guidance. We can let a bit the inflation's going up. It's okay for us because our priority is growth, and like I said, Scott Bessent is targeting 3%. We are not so far, 2.6. I think it's very quite good, the performance of the growth in US, if you see how problematic it's here in Europe. So we can expect that they let go a little bit the things and the spiral of inflation's going, and be a little bit more, I would say, high inflations, not so much like focus on the 2% like the ECB.
So Mark, coming back to Europe now, where we're from, what do you think it means for the European investor here?
it's very important for the European investor because you are a euro-denominated currency, and now if you invest, if you have been following the market and you are investing on the tech stock, it could be semiconductors, it could be software, you have an exposure in dollar. So of course it's important because you made money because the dollar went up and the stock went up. So when you are euro-based, this is quite a fantastic thing. But as we know, sometimes maybe the things, that's why you need to monitor closely the central bank as a European investors, because you have another risk factors that a US investor doesn't have it, which is the trajectory of the euro dollar. And traditionally, you don't hedge when it's equity, you hedge when it's fixed income, that's for sure. But nevertheless, if you are nervous about what's going on, and you could be, especially with the dollar going up again, I think it's very important, and I think this is the message here, and that's why we are monitoring. And at Merrill Funds, we have a background of risk management, and this is very key because this is really understanding the risk management is very key in this market. That's why I say maybe the market is on exuberance, stocks are going up, the central bank are not in the front line, but that's why I say it's very important, especially in this type of year, risk management, because we have been witnessing daily volatility quite high, not only on the stock, but also on the currency side. And the possibility of crack for the yen to come back, because the yen is quite weak at the moment, extremely weak, when the dollar is quite strong. So again, our message, risk management is the priority. It should be your priority when it's our priority.
Right,
Thanks,
Mark. Thank you very much for all of that, and thank you everyone who was watching. I very much encourage you to check out the rest of the channel and our videos at Merrill Investors. Check out our LinkedIn as well and our website merrillfunds.com. And I wish the best and hope to see you in the next one. Thank you very much.
Thank you.